Now that we've gone through and we found the balance of all of Cleanmore Appliances T accounts, we're one step closer to preparing our financial statements for the period. One thing we need to do before we begin to prepare those financial statements is make sure that we have debit-credit equality, that our debits equal our credits, and that is done on the adjusted trial balance. I have gone through for the sake of time and filled in the value of some of these accounts, but I did leave some blank just so you can get the process of how I'm doing this. Once you've done it a couple of times, it's doing the same step over and over and over again. It's kind of what accounting feels like all the time. No different here on our adjusted trial balance. So cash, according to our T accounts, has a balance of $7,456,173.21, and it is a debit balance. But whatever the balance is of your T account should be the same balance represented on your adjusted trial balance. So I need to bring that debit balance over to the debit side of our trial balance. So I just click on the cell I want to put it in, I hit equals, I go back to my T accounts, I click the balance of that account, and I hit enter, and it brings that number on over for me. Same with equity investments. It's going to have a debit balance because it's an asset account. So I hit equals, I go back to my T accounts, I see the balance of equity investments is $2,187,500 on the debit side. I click that number, I hit enter, and it brings it on over. And I did the same thing beforehand for all of our inventory accounts, receivables, supplies, etc. I left accumulated depreciation blank on purpose. As always, you're more than welcome to send me a copy of your work in process as you're working on this assignment if you're stuck and something's not working out. And on this assignment or similar assignments in the past, a lot of those that I've got is people saying my adjusted trial balance isn't balancing and I can't figure out why. And a lot of the time it's because they had accumulated depreciation with a debit balance. And I get it because it's technically an asset account, but it's a contra asset account. It's an account tied to another asset which decreases its value. So if asset value is carried on the debit side, the decrease of that value should be carried on the opposite side, on the credit side. So in case your numbers aren't working out, first place you want to go and look is at your accumulated depreciation accounts to make sure they do in fact have credit balances on your adjusted trial balance. So let's bring it over our balances and hit equals. Go back, the first one we have is accumulated depreciation of buildings, and according to my T's, that has a $45,000 credit balance. So I'm going to hit enter and bring that number over. Accumulated depreciation of equipment, according to my T's, has a $15,000 credit balance. I'm going to click on that and then hit enter to bring that number over. I filled in our liability accounts over here, our dividends payable, accounts payable, salaries payable, bonds payable. We don't owe any money on dividends right now because we declared it, but we also paid it during the same period. So we have no dividends that have been declared that are not yet paid. Therefore, we don't have a liability. There are little dashes in there. If you look close enough, that is Excel speak for a zero. They have a $0 balance. Speaking of $0 balances, down here under bonds payable, we see that on this template, there's premium on bonds payable and discount on bonds payable listed. I want to make sure you guys know what is a premium and what is a discount. So pretty much all the variations of this assignment, you're going to have one or the other, but on the accounts, you're going to have the T for both. You're going to have a spot for both on your adjusted trial balance. Cleanmore issued their bonds at a premium, and that premium, even after being amortized, still has a $57,000 balance. If we go to our T's, they don't have a discount. That's fine. You don't have to have every number filled in. There are going to be dummy numbers on here. For us, this one is our discount. So we go to discount on bonds payable. We hit equal, we go back to the T account, and we bring over that $0 balance because there is no discount on our books. Scrolling down further, again, I added all the rest of the liabilities by copying their balance over from T accounts. I started bringing over some of the equity accounts as well. Should make a note that treasury stock common is a contra account, just like accumulated depreciation above. It's tied to our equity in this case, but since we own those shares and the public doesn't, that treasury stock is not increasing the value of our business for our shareholders. It's decreasing it. So treasury stock common will have a debit balance. Then I have retained earnings and cash dividends down here. So the whole process that I've been doing thus far is clicking equals, going back to the T accounts, clicking on the balance I want to bring over, hit enter, and it brings it over. And it's going to work just fine for your assets, your liabilities, and your equity. And the reason that is they're permanent accounts. There's always going to be a running balance of those accounts at all times, going from period to period. But some accounts aren't permanent. Some accounts get closed at the end of the period, namely your revenues, expenses, and withdrawals. and they can also have an effect on your retained earnings. I'm telling you this because in our journal entries at the very bottom over here, we do have a closing entry. We have to close our cash dividends. Well, you close cash dividends to retained earnings. The problem is if you just bring that number over from the balance of your T, which we have right now for retained earnings, as a big fat 0, once you close, it's going to change the balance on your trial balance if you use a cell reference to carry the numbers over. And you don't want to do that because your trial balance should be after you've done adjustments, but before you close. We're getting into a whole lot of fancy lingo right here to say there are 2 accounts on here, the 2 that I have highlighted, that if you want this assignment to work out in Excel the way it's supposed to go, we're kind of shortcutting to keep this thing a little bit smaller than it would need to be if you really did the full amount. These 2 you have to type in, retained earnings and cash dividends. So for retained earnings, what is our balance? Our balance of that account we just saw is 0. So I'm actually just going to type in a 0 and hit enter instead of bringing a cell over. What about cash dividends? Well, we go and look at that T. That's got a balance of $408,750. Cash dividends is a withdrawal account, which is temporary. We're going to reduce it to 0 at the end of the period. And if I use a cell reference for that amount that I have highlighted right now, when we close it later, it's going to think that I wanted to reduce that on our adjusted trial balance. I don't. I want the full $408,750 balance on that adjusted trial balance because that's what the balance was after we did our adjustments before we close the point in time when we make that balance. So for cash dividends, you need to type that number in as well. So 408,750 is going to go right here on the debit side. And then I filled in the entire rest of our revenues and our expenses. And here's the point in time where you pray, did your debits equal your credits? So you can move on and start preparing financials. So how are we going to figure that out? What is the sum of our debits? Well, it's equal to the sum, equals sum, open parenthesis, of everything above that spot in the total column. Only going up to the top of the numbers. I hit enter, and I'm going to come up with $26,408,173.65. What about the other side? Well, since that's just the sum of column B, I can fill handle to find the sum of column C. If you're getting one of those because you're zoomed in, you can always fix it by double clicking the edge and it'll expand it. And look, it's the same number. So our debits equal our credits. We are prepared to start making our financial statements, our income statement, our statement of retained earnings, and our balance sheet.